Welcome to the daily update, where I'll go over the action in the market for Tuesday, April 23rd, and then we'll see how things look for Wednesday, April 24th. Saw a nice little follow through upward move in the market. We closed near the high for the session. Unfortunately, we're still negative right now. We're still below short and intermediate term support, but we are seeing some real signs of improvement. We also have the potential for a ZWAG NYSE Brett thrust to be triggered, and I'll go through that later in the video. But all in all, it ended up being a positive day. We actually saw growth show some improvement. We saw the small caps have a good day, and the market was pretty positive overall. Now we want to see, can this continue? We still have a negative backdrop that we're dealing with. We need more proof, but at the same time, we are looking a little bit better for right now. Let's go back and talk about what happened. Right at the open, we had a gap higher open. The futures were positive during the night. Europe had a good day. That carried over into the open for the cash session, and prices climbed above R1 pretty much right off the bat at 5,043. As the day went on, prices held on to those gains. We didn't really see a lot of selling into strength. We chopped sideways for a while, but then picked up the pace and kept going higher again. We climbed up to R2 at 5,076 and closed slightly off of the high. So we were up 1.2%, a pretty solid move, especially in the light of the negativity that we had been seeing. To see a solid up move with growth and small caps looking a little bit better, that was kind of a breath of fresh air for folks that are positive on the market. But we're still below average with volume. The only days that we've really seen that are above average with volume, well, there was options expiration last Friday and then a couple of down days. But other than that, we're not seeing a real explosive growth in volume as we've been bouncing back up. We're still negative in the short and intermediate term, but showing some real improvement. But we have not switched over to positive yet. And this week is going to be about inflation and interest rates. That's the same scenario the market's really been dealing with. We're going to get some economic reports coming out that are really going to shed some light on the inflation situation. And then there's earnings reports that are coming out, and those can have a real impact on the market as well. We want to keep an eye on all the different geopolitical things that are going on, specifically in the Middle East. Some comments. Growth in small caps had a really solid day. We just want to see, can that continue? Because both of these areas have been quite weak over the last week and a half or so. Oil did go up, but it wasn't necessarily because of geopolitical tensions. It was more due to market forces, at least from what I could see. We closed at $83.30 a barrel, and we're only looking oversold right now with our oscillators, and our oscillators are still negative. But if they can start to turn and go back up, that would show the momentum is switching back over and looking more positive. The slope oscillator is our touchiest oscillator, so that's why I have it on this list. And that's the one that we watch to see if things are starting to shift. Intermediate term, a little bit shorter list. Mainly the indicators are more momentum based. We have the TTM squeeze, which is turning a little bit more positive, but still negative. The ease of movement ticked up a little bit, but still extreme negative. The PMO studies also showing some improvement there. And the NASDAQ 100 bullish percent index ticked up, but it's still very, very extreme negative. The Chaikin money flow also showing some improvement, but still negative. But then when you look at the long term, we're still overbought or extreme positive with our 150 and 200 period moving averages. We're wondering if there's going to be a shift into this in the current scenario that it looks like the Fed is likely done raising rates. That seemed to be more assured a few weeks back. It's more in doubt right now. We'll be waiting to see what kind of inflation reports come out and if there's any statements that come out of the Fed. And it looks like they were going to cut rates in 2024. That's also in doubt right now. The dollar was down and interest rates, this should be lower here. We actually ticked down to 4.6% for the 10-year yield where we had been at 4.62%. We're still inverted with the yield curves. Sentiment is still negative, but we ticked up from 38. We climbed up to 40. Our trend is still negative. The ADX is still above the moving average, and both of them are above 20. That suggests a weakening trend or a strengthening trend, but the red line is still on top, even though it's coming down. We were up in Tuesday's session, so our bias is positive. That usually measures just one day. And then the momentum, the last number of days taken together, I've switched that over to mixed because we really saw things turn quite negative there. And we need to see some more positive days as we go forward to change that over to more of a positive stance. We did get some economic reports on Tuesday. We had the S&P Global U.S. Manufacturing PMI, the preliminary reading. This actually showed a little bit of weakness. That 50 level, when we're at 50 or above, that shows that there's an expansion of manufacturing. When we're at 50 or below, that shows contraction. We came in at 49.9. And I don't have charts for this or the next one to show you. I just want to focus on the numbers. The services also came down, but are still slightly above 50 at 50.9, or last time it was at 51.7. I will have some charts to show you here. New home sales came in much stronger than expected. Kind of a little shocker to the market because of rising interest rates, rising home prices, and still difficult economic conditions. To see home prices or the sales of homes really going up, that was kind of a nice surprise to the market. They came in at 693,000. They expected 670,000 and up from the 637,000 we saw last time. Here are some charts. These are showing new home sales in thousands, how it has been going up right now. So this is a big part of the economy for some folks. And if homes are getting sold, that tends to bode well for economic activity. Then here's the 3-month average on a year-over-year basis for the median home price. It's also going up, which could be pressuring the new sales of homes, but at the same time, it's going up for right now. Then here's some charts from Isabel Net where the 10-year yields, where the futures market is predicting that we're pretty much going to be going sideways to slightly higher when it comes to the 10-year yield. Goldman Sachs, they're a little bit more optimistic. They have a scene going down to 4.25% by the end of 2024. This changes all the time, so this forecast could be updated anytime. And then these are the weekly announced buybacks for the S&P. It's ticking down just a little bit, but it's still going up overall. And then it also shows the actual cash amount for that. So that it's pretty strong right now. And when companies do buybacks, it's a form of manipulation, but it's also taken as positive for the market since they have to go in and buy the stock, and then it removes the number of shares that are from the market that other folks can trade. So it makes them more precious. And looking at global manufacturing, we are above 50 and continuing to go up. So this is showing some global economic growth as well. And then I'm not quite sure how to read this. They've got this thing called memory effect with indexing the previous, this is looking at gold, the previous period's fair value estimate rather than the previous gold's price. Well, isn't the price what you really need to do? They come up with all these convoluted ways to try to analyze things. The actual price here is in blue with these little squares that are going up as gold has been going up. And then this is the model with memory, suggesting if you base things around this model, that gold still has a potential of going higher. Looking at cyclicals, now cyclicals, they cycle through the economy. They do better when the economy's strong. They have weakness when the economy is weak. And we can also look at this in a form of growth versus value. It's not quite the same, but when we're in a more solid environment, we tend to see the cyclicals outperforming. And that's what they've been doing. And this is what's been helping the market going higher. Lately, we've been really dropping down as the market hit some rough times. We might be bouncing up just a little bit now. This chart's a few days old. But if we continue to go down, that means the market is getting more defensive. And that's what I've been watching for now. We're seeing value show some improvement, and that's kind of part of this defensive area. We're seeing parts of the market that are seeing some favor right now that the smart money tends to get into when they think we're going to head into a difficult time with the stock market. like what happened at the end of 2021 going into 2022. We could see that unfolding as it was happening. It's kind of happening now, but if we have more days like we saw on Tuesday, with growth really doing well and even the small caps participating and interest rates still coming down, that could turn this around and see the cyclicals actually perform better. A couple of charts here, and we're wondering, the bear's still alive, but maybe on life support for right now. And then this is just showing the disconnect between the economy that Wall Street uses and the economy that applies to real day, everyday people and real life, where we're seeing a lot of credit card defaults. This is just from Discover and how since the beginning of 2022, we're seeing a lot of real defaults with credit cards right now, as folks are having to use them to live off and just do necessary things. And then it comes time to make their payments and they just don't have it. And this shows some of the struggle that folks are going through in real life, not necessarily Wall Street life. And then this probably is showing some improvement now. It says U.S. tech stocks get punished. And yeah, they got hammered hard last week. And we came down to a really low rating. Maybe this is a form of some kind of oversold condition. And now folks are seeing some bargains and starting to go back in. Here's our cycles, not really sticking over the last couple of days, unless you follow the blue line here. I don't know if there's anything to this or not. It seemed like we're kind of sticking with this, and for a while we're even sticking closer to these cycles than we were to actual seasonality. But it has us bottoming at about the 24th. Well, that'll be tomorrow's session, and we've been going up the last 2 days. So, and again, I don't know if I want to split hairs on this thing. I'm very apprehensive about these kinds of ways of studying the market. I want it to really prove itself to me. And it's been doing okay for right now, so I've just been keeping an eye on it overall. Our intraday chart, we gapped higher and quickly went above R1, and we didn't see an awful lot of selling coming in here. We went sideways for a while and then made our way up to R2 and then closed a little bit down from R2. So a pretty positive day on the charts. Intraday, where we saw a real move up here later in the day on yesterday, and that's where things really started to kind of shift. We were flat in the initial overnight session, but then we saw the futures. Europe had a good day. They were positive. We took that over into the cash session, and still we held up for the most part during the cash session, and we're actually showing some improvement in the initial overnight session. But this is an area that's causing some concern. We still see the red line above the blue line. That means value has been outperforming growth, even though they're on different scales. This is an intraday chart. We're seeing a little bit of an improvement here. We want to see this really going back up, but an awful lot of damage was done when we look at the S&P growth to value ratio intraday. Our end of day charts, growth was up solid, had a really good day. Value was also up. Growth was up for the mid caps as well as, well, they were about even with the small caps there. So we saw a bit of a tick up with our growth to value ratio for the small caps, but still an awful lot of damage had been done. A little bit of turn up here with the mid caps and a little bit of a turn up as well with the S&P growth to value ratio. Keeping an eye on this. These are a couple of ETFs that we use, and then I put a moving average rainbow. We had come all the way down to this 250 period moving average. So far, it looks like we're potentially we are bouncing up off of that. The potential part is, can this continue? And we're seeing a little bit of an improvement here, but an awful lot of damage was done to the ratio between discretionary and staples. Large cap growth came down to its 100 period moving average, is bouncing up off of that. That's positive. The Wilshire was up 1.27%. This is a broad market measure, so to see that going up just shows that things were more positive. It was actually down on Monday, and we were seeing a series of lower highs and lower lows with the Wilshire, but maybe we're starting to break that pattern now. Our trend is still negative. Even though the red line is declining, it's still on top. The ADX is rolling over a little, but it's still above its moving average. So we still default to negative, and we suggest that this is a strengthening trend until we drop below the moving average. It won't turn positive until we see the green line cross back above the red line. Short term, also rolling over a little bit, but the red line is still on top. And we're dropping back to below average volume. When we look at our volume oscillator, sentiment, this has not been updated yet. It should be either after Wednesday or Thursday session. The Ulcer Index, which had been very comatose for all of 2024, still is giving us some pretty high readings as it's registering these downward moves that we were seeing in the market. We are dropping off, though, with the VIX, coming down with the line chart as well as the bar charts, as volatility is slowing down a little bit and fear is coming out of the market as it's been going up. And we're also seeing the VIX of the VIX, the volatility of the VIX continue to drop. We're actually dropping below the moving averages with the bar chart, and we closed below the moving averages with the line chart. And we're rolling over a bit with the momentum of the VIX, where the MACD is still positive, but it could come down and cross below the moving average. The equity put call ratio actually ticked up a little bit. That was kind of surprising on an up day. But when we look at the 5 period, we're continuing to decline. That's positive for the market. Coming down with the volatility risk premium, we were getting really high readings here. It could have gone higher than it did, but now we're coming more into this band. So we're not really seeing anything extreme for the time being. We came down with this fear gauge, also declining with this other fear gauge. And this ratio between risk on, that's when people are getting into stocks, and risk off means they're getting out of stocks or getting into more conservative stocks or actually getting into bonds. This really dropped off when we got hit last Friday. It's been showing some improvement as this ratio has been going back up. Folks are willing to come in and assume more risk by buying stocks. Our advanced decline line studies, these are this chart and some of the other charts that I'm going to go through show you some of the hope that started to develop after Friday's session. Actually, we can go back to Thursday of last week and to see internally that things are showing some improvement. We're turning up with the advanced decline line based on price and volume. That's what we've been watching. So far, it's following through and looking better. We're also seeing an expansion of the new highs and a contraction of the new lows. We haven't turned up with our 5 period or our 10 period, but just looking at the score, you can see we've been seeing a bit of an increase in the new highs here. And we're crossing back above zero with the advanced decline ratio. We had come down, we're looking really negative, but even with the market going down, we started to see this bouncing back up, and now it's turning back more positive. Accumulation distribution, still negative, but starting to turn up, although it needs to get above the moving average to turn positive, and then it would turn even more positive if the moving average could start to go higher as well. Chaikin money flow, giving us a really extreme reading. It's still negative for right now, and this is possibly an extreme negative reading, but it has been improving. And the Chaikin oscillator didn't give us an extreme reading, is turning back up, but is still below zero. So it's still negative, but improving. Our cumulative NYSE advanced decline line showing some strength here. Our regular advanced decline line coming back and staying above the moving average. That's showing improvement on a broad scale. Our other NYSE advanced decline line also showing some improvement. The common stock based on price for the NYSE going back up, as well as when we measure this based on volume. So we are seeing continuation of an improvement. We're actually turning back positive here. When we look at the new highs minus the new lows for the NYSE, that's also more positive. We had dipped down and gone negative. The fact that it's back above zero is positive for the market. When we look at the S&P 500 cumulative values based on price, still going up. We're also continuing to go up based on volume. And our advanced decline line study showing some improvement here, coming back above the moving average with the NYSE common stock, just a little bit above the moving average with the S&P, just about on the moving average with the mid caps, and just a little bit below for the small caps. So we're showing a little bit of a bounce here. We do have some overhead resistance if we keep going. There's a pivot level just a little bit above current price, and we have the 50-day moving average, which we fell through. If we start to come back up, is that going to provide overhead resistance? On the bottom, we are below average with volume. Seeing a little bit of an improvement here with our double and triple exponential moving average based on 20 periods. We're coming back right up in between the two moving averages here, showing a little bit of an improvement there. This is another thing we've been hanging on for hope. The 20-period exponential moving average of the S&P itself is continuing to improve, as is the 50 and 200. Force index is still negative, but showing some improvement, getting closer up to that 0 level. And we're no longer extreme negative with the short-term stochastics. And I need to show this, or I feel I need to explain this because I have a lot of folks that are watching the videos for the first time. This is a further subdivision of the short-term time frame. So we have short-term, intermediate short-term, and long short-term. So we're no longer extreme in the short-term, turning up and possibly coming out of being extreme negative in the intermediate short-term. And we're starting to turn back up, but still negative in the long short-term. Coming back up into the -1 standard deviation channel. We had come down into the -3. Then after Monday, we came up to the -2. Now we're into the -1. It would be even more positive if we could get above the midpoint and then see the midpoint start to turn back up. Intermediate term, we're turning up, but still negative with the balance of power. The go, no go is switching to a lighter shade of purple here after it had been a deep purple, smoke on the water look. Well, this is looking a little more positive. And we're bouncing up off the lowest low value. Again, if we could get above the midpoint and stay above the midpoint, that would turn things more positive. TTM squeeze. We are coming down and getting an extreme negative reading. However, we went from the dark red to turning to a light shade of red. So that's showing more of a positive bias to this indicator. And we're bouncing back up with our 50-period double and triple moving average study, exponential moving average study based on 50 periods. But we have a ways to go for this to really show some improvement. This is more intermediate term. And we're coming right up to the exponential moving average. That is acting as overhead resistance now. So we're going to have to clear that if we're going to stay more positive. It would be even more positive if we could clear the simple moving average, since that's what most investors use. So far, it looks like the 100-period moving average acted as support. Even though we didn't quite get down to it, we've been bouncing up to this point. And we're bouncing up a little bit with the ease of movement after getting an extreme negative territory here. And we're flattening out, but still negative with the Erin indicator. The red line is on top, and it's coming down, but the green line, the red line are sellers. The green line, that's buyers. The difference between the two is what the oscillator comes up with, and we're below 0, but we're starting to flatten out. This is actually quite positive in the short to intermediate term. The S&P McClellan oscillator has crossed back above 0 after giving us an extreme negative reading. So we're just barely starting to turn up based on price, and you can see it's more pronounced based on volume. And as I tried to explain in yesterday's video, this sometimes can give us a heads up that things are turning and looking better. But there have been times when we've seen this, where volume is leading price on this indicator, and it's been a false signal. So we just want to confirm it with other things. Mainly, is price going to continue to go up? But this is also showing some improvement. We've also crossed back above 0 and turned positive with the NYSE McClellan oscillator. So we're just barely starting to turn up with the summation index based on price and volume. We're turning positive now with the Swenlin trading oscillator, crossed above 0 with price and volume after it had been quite negative. But momentum, we're not really shifting it. It takes a little longer for that to happen. We're still declining with the PMO. We're turning up based on price and volume, but we're still below the moving average. We're looking a little better with the PMOs that are rising. This is actually turning more positive. We're turning up with the buy signals, but we're still extreme negative, and now finally starting to turn up with the percent of stocks that are above their PMOs. And we still remain neutral, though, with the Elder's Impulse system for the S&P. Parabolic SAR, that is negative now with the dots on top. If we see some kind of an upward move and the dot comes underneath, that's going to really switch things over to looking more positive, but we're not there yet. The slope oscillator, turning up just a little bit, but we're still getting an extreme negative reading, and we're also continuing to be negative. The MACD ticked up just a little bit, but we're declining below 0 and below the moving average, so that's still negative. So all of our oscillators are showing that the momentum continues to be negative. We're going to need to see more follow-through for this to change over to being more positive. And now we're wondering, if the 100-period held up as support, what's going to happen here with the 50-day moving averages? And now, because we were going down, we're starting to see the 20-period moving averages begin to fall. If we get above one of these 50-period moving averages, are the 20s going to start to act as overhead resistance? Not really showing much of an improvement here with the bullish percent index. We're still below 50 and not seeing an awful lot of improvement. This measures the point and figure buy or sell signals inside of the S&P. Not really seeing that yet. We ticked up just a little bit with the NYSE bullish percent index, and we're above 50. So this is holding up a little bit better than it is for the S&P 500. And we're turning back up with the NASDAQ 100 bullish percent index after getting a really, really extreme negative reading. The money flow is turning up a little bit here, but it's still below 50. That's negative. Turning back up after being extreme negative with the ultimate oscillator, but still negative. The vortex shows the red line coming down, so that's still negative, but the green line is also coming up. So we're seeing some improvement there. The RSI based on 14 periods is going up. It's still below 50. We're also still below 50 with the RSI 9. We're below the moving average with on-balance volume, but we did see some improvement. And we're no longer extreme negative with those stocks above their 20-period moving averages, and we are seeing this continue to improve, but we're still below 50. We're also turning up with the 50-period moving average. We're continuing to go up with the 100-period moving average and the 200-period moving averages. So there is some internal strength that is building. We need to see follow-through here. The copy curve is another momentum oscillator showing that we're still negative. The Sean trend meter starting to turn back up, but it's more in this neutral area. The context, though, is that we had been going down, and since we're turning back up, this is looking a little more positive. And maybe the bottom part of this Ichimoku cloud, it kind of lined up with the 100-period moving averages for the S&P, so possibly that is providing support. And we're coming down a little bit with the standard deviation, but we were coming down really fierce and really fast with this, and that's what shot the standard deviation up. This doesn't measure direction. This measures speed. And now that we're going back up, we're going to see if this indicator starts to drop back off, and it measures the last 10 periods. We're seeing a little bit of an improvement here with the Heikin Ashi with an open candle. We're still negative with the Kegi, but pointing up. We're still negative with the Renko, and we're turning a little bit more positive with the 3-line break. Long term, now we're wondering if we come back up and hit this R1 level, is that going to act as overhead resistance? This is the 51.10 to 51.11 level that we lost last week. We'll see if the market is able to get that back. We're still extreme positive with our 150 and 200 period moving averages. And then looking at the Keller market model, we're still negative in the short term. We're negative in the intermediate term with the small caps. We did turn from negative back over to positive with the NASDAQ 100. And then looking at the macro model, where stocks are negative in the short term and bonds are negative across the board based on price. We saw a recent turn last week with commodities in the long term, turning more positive. No changes here with the decision point scorecard. Negative in the short term, positive in the intermediate term, and mixed in the long term. And we saw an awful lot of blue or green again. The materials sector, which can sometimes be one of the more defensive areas, that saw a BPI cross below 50. So it's showing some weakness there after it had been showing some pretty good strength there for a while. But all the other signals that we saw are positive. We're seeing some MACD crossovers. We're crossing above levels here with the NASDAQ. We saw a bullish percent index with staples. That's more defensive, so that could actually be a little bit of a concern. It's showing some strength as it crossed above 50. And we're turning back up a little bit here with the equal weight. That's the red line. And actually doing okay, but we came down. Actually, we went up a little. I get this mixed up. We went up a little bit with the ratio as the mega caps outperformed the rest of the market. And the Dow's been holding up fairly well. We set kind of a base here, came back above this S2 level. Now we're wondering, is the 50-day moving average going to cause some resistance? We've turned over to positive now with the diamonds, with the Elder's Impulse system, bouncing back up above this S12 level for the NASDAQ, also coming right back up to this S2 level with the NASDAQ 100. And we still remain neutral with the QQQs when looking at the Elder's Impulse system. The momentum for the NASDAQ 100 is still negative. We're seeing a cross here with the 20 dropping below the 50 for the QQQs. That's short to intermediate term negative. We're going to need to really see the Qs put in a good show here to get rid of this death cross that we're seeing. And we did see some improvement with the small caps, but now we're just kind of coming back into the middle part of this range that they've been in. They have turned positive when looking at the Elder's Impulse system for the small caps. We broke above this level here, which it sometimes is resistance, other times is support. After Monday, this has acted as resistance. The fact that we're breaking above that is positive, but we've done this lots of times before, and it's like a treadmill. You run and run and run, but you end up not going anywhere. We are looking a little more positive with the RSI coming back up to 50. The longer term trend is positive. We're still negative with momentum, but we are turning up slightly. The mid caps, and I don't know if there's anything to this or not, but if you want to try to pick out why did we stop going down when we stopped going down, the mid caps hit this pivot point and have been bouncing up off of that. Usually you would think the large caps and the mega cap, they don't get their cues from the mid caps, but the mid caps are a stronger area right now. So maybe it does have some influence on the fact that this is where we found some support in the market. We're still below the 50-day moving average though. But we switched over to positive with the Elder's Impulse system when looking at the mid caps. Apple going to be reporting this week, still in a downtrend, was up 0.64%. Tesla was up 1.85%, but still really under a lot of pressure. Also, we'll be reporting. Nvidia came up 3.65%. That's a nice little bounce, but still below its 50-day moving average. Microsoft also bounced up, but still below its 50-day moving average. Meta is just a little bit, it's right about on its 50-day moving average. It was up almost 3%. Amazon is climbing a little bit above its 50-day moving average, so it's looking a little more positive. The FANG index did bounce up over 2%, but we're still below the 50-day moving average. The financial sector still, we're seeing some more follow-through strength here. We climbed above the 50-period moving average, and we're up 0.64%. And I wanted to show the ratio here where the financial sector compared to the S&P 500. I usually go through this in the intermarket analysis video. Now, when we got hit, that's when the NYS, the New York Community Bank, actually, this was earlier in the year when we saw the banking crisis back in early 2023, and we've been going sideways since that time. We're starting to break out above this range. We pulled back a little bit with this ratio on Tuesday, but we are seeing some improvement here in the financial sector. And then we've been watching the staples to tech ratio. It came right up to this moving average. We ticked down a little bit with this ratio as tech outperformed staples, but staples are still looking pretty strong right now, and that's more of a defensive thing and something that I'm keeping a real eye on now. The dollar was down, which did give some support to stocks. Oil was up, but more, as I said, more due to market forces rather than any geopolitical things that I could see anyway. But I don't follow oil all that close, so I may have easily missed something. When we look at the S&P and compare it with the rest of the world, we are seeing an improvement here. Our 10 period is getting stronger. We're still pretty much flat when we look at the 50 period correlation. And we were up over 1% with the total U.S. stock ETF, but we're still below the 50-day moving average. We were down slightly here with the 10-year yield, so we were up slightly with the 10-year based on price. And then we're not really seeing a major change here with our growth to value ratios. We ticked up with the Qs to S&P, but an awful lot of damage has been done. Discretionary continues to underperform the S&P. We ticked up a little bit with large cap growth versus large cap value. So we're turning up a little bit with the large caps, mid caps, and small caps, but we're still well below the moving averages. We're still below 50 with our 10-day average of the S&P 500 highs minus the lows. And this takes a while for this indicator to really kick into gear if we're actually turning back more positive. We're actually coming back above zero with our advanced decline line ratio based on 19 periods here, looking at price as well as volume. So that's turning more positive. And this lines up with the blue and red chart that I showed earlier on, the advanced decline ratio. This is just a different way of kind of measuring that same thing. And we're coming back above zero with our 50-period exponential moving average of the new highs, new lows for the S&P. That's showing some improvement after we had dropped below zero. We're also seeing a bit of an improvement here with our 5-period moving average of the new highs, new lows across the broad market. It's ticking up, but it's still below zero. utilities to, or S&P to utilities ratio, it's continuing to go down, and that's really not helping stocks, as we saw utilities bounce on Tuesday. And we're coming down a little bit with the staples to S&P 500 ratio, but we have really been spiking up here. We want to keep an eye on this. If this goes up, that could be negative for the S&P 500. And then here's this WAG NYSE breadth thrust. We may have already triggered one now, but because this is a next business day chart, this is from Monday's session. And we were up on Monday. And that was an okay day, a nice little bounce. Well, we saw a pretty solid day on Tuesday. Have we triggered one yet? Have we seen enough of an upward thrust here? We have 10 days from the time that we hit that extreme negative reading to get up to an extreme positive reading. And we won't know until tomorrow because there's a 1-day lag on getting this indicator updated. But it is improving for right now. That's why I say it's a possible signal is being triggered for this WAG NYSE breadth thrust. We don't know that yet. But based on Tuesday's action and the improvement that we're seeing with the data that we do have, it looks like it could be possible. So what's our outlook for Wednesday? A lot of earnings reports coming out. We've got Tesla, they came out, Microsoft, Meta, Alphabet. About 40% of the S&P 500 will be reporting. We're still negative in the short and intermediate term, but showing signs of improvement. And we're going to get, I didn't update this, so I'm going to go to the next chart here. We want to keep an eye on the geopolitical events. We're going to get durable goods. That's kind of, they don't really put it in as a big economic report, but I like to keep an eye on that one. And then on Thursday, we're going to get the first reading for GDP for the first quarter of 2024. The big inflation report is going to be core PCE on Friday. So here we have the different economic reports that are coming out, what the previous was. We don't have any forecasts here. And seasonality, well, we're neutral to negative with the Dow, or we're neutral to positive with the S&P and NASDAQ. And Wednesday tends to be the most negative day of the week that we'll show here in a minute. But when we look at the election year, for the 18th trading day of the month, we do see a little bit of positive seasonality here. Here's a new chart where it says weakness now isn't abnormal. You know, they're doing everything they can to keep people from freaking out. When they came up with this chart, it's when we were really going down. Well, now we're starting to work our way back up. And the bigger picture here is, do you see how from April into the latter part of May, and according to this chart, even into the beginning of June, this is where we tend to see some weakness before we see some strength after that. Then this kind of shows that same thing. We're seeing a little bit of an improvement here when we compare what the S&P has been doing with the top first quarter during an election year. We really came down underneath that. We're possibly coming back up, but then right about the beginning to early part of June, this is when we tend to see more strength coming back into the market. Wednesday is the most negative day of the week, and we still could be seeing some positive seasonality as we set to finish out April. This is showing kind of that same thing where we might see some weakness throughout May, and then after that, going into June is when we tend to see more strength. But be aware that according to Goldman Sachs, the first couple of weeks of May tend to show some weakness. Tom Bowley, we're just going to be finishing up the negative part of the month according to his research before we get set to go into some positive seasonality there. Here's a new chart posted by Jeffrey Hirsch, looking at May, just trying to get a little bit of a look out there, where we're up 13 out of 18 times, we're down 5 out of 18 times, but the return is not very solid. It's only up 0.1% during an election year. So what are our warning signs? The parabolic is still negative. And the bullish percent index is still below 50. The bullish percent index for the NASDAQ 100 is still extreme negative, but it did bounce up. The Chaikin money flow is extreme negative, but bouncing. The Chaikin oscillator is still negative. The ultimate oscillator is extreme negative, but bouncing. It's actually no longer extreme. It bounced up just a little bit from that. The Copic curve is negative. The vortex is negative. Our oscillators are also continuing to show momentum is negative. And we're still below short term. That would be like the 20-day moving average. Intermediate term would be the 50-day moving average. And then the long-term support is that weekly chart showing the pivot level that we broke above and then came back down below. But the momentum for the NASDAQ 100 is still negative. Positive signs. We have seen the McClellan oscillators for the S&P and NYSE turn back positive. They crossed above zero. The Swenlin trading oscillator has turned positive. The long-term trend is still positive when you measure it based on moving averages. The equity put call ratio based on 5 periods is still going down. The financial sector is positive. And we're wondering if a new ZWAG NYSE, there should be an NY in here, Brett Thrust is still setting up for a possible signal. I've got to be real ambiguous about this. It's setting up possible. We don't know yet. It hasn't officially been triggered at this time. So our conclusion, we're negative in the short term, but showing some improvement. We're still negative, but improving in the short term, as I just said. And we're seeing some bouncing in the intermediate term. We're still positive in the long term. Thank you. Have a really good day, and I will talk to you in the next video.